Hi guys, welcome back to my channel, Trading and Investment. I hope you guys have learned something from my previous video on coronavirus madness, on how to identify opportunities. And I'm pleased to share this fantastic business with all of you out there, whether you are an employee or whether you are considering doing this trading and investment as a part-time hobby to supplement your income as a second stream of income, so on and so forth. You're most welcome to give it a shot. And I believe through practice you will be able to make it right. And for those who are new, please feel free to go to the website here, the under youtube.com. I've already put the link here so you can go and watch it. Right, on today's video I'm going to explain a bit more detail about how to draw trend lines. Right now, there are many methods of analyzing the so-called price action in the market. Right, for example, if we are looking at a currency pair like this, for example Aussie yen, right, for example Aussie yen, which is a forex currency pair. There are people who read the news, about interest rate, about what RBC is going to do. Are they going to lower the interest rate by 25 basis point? Or what is the central government in Australia going to do now that they are suffering from the effects of the bushfire? How is the economy doing, the GDP doing? There's so many ways that you can analyze a currency pair. For me, whether it's a currency, futures, stock and shares, commodities, or even ETF, I basically make use of trend lines to help me to make a decision whether to buy or to sell, or if there is a trade setup or not, right? So it's fairly straightforward for me, right? So yes, you can say that I'm more of a technical analyst kind of person. So trend lines is what will be the first tool that I will go to. Reading up on the news and all this, other than keeping myself informed and entertained, it serves as a confirmation, but it's not the main driving tool for me, right? Not the main driving tool. So the trend line remain my best bet, so to speak, right? So that is what we're going to cover in today's video: how to draw trend lines. Now, if you were to go to Google and search on or even watch YouTube, there are many people out there who can teach you how to draw trend lines. So I'm not going to be quoting all these technical and scientific part of it, but I'm going to share with you my own experience and how it has served me. When I say it served me, meaning it has been able to generate profits, consistent profits for me thus far. All right, so here we go. First thing first, you have to identify the product that you want to be looking at. So into this video, we are looking at, for an example, using as a case study, the Aussie yen, right? Aussie yen, which is one of the forex pair, right? So first thing first, I will look at the product on a weekly basis, right? On a weekly basis is to give me a good overview of where the market is going right now. Okay, so you can see from here. Okay, you can see from here. Okay, right? If you were to draw it here like this, see? Okay. right? It's not too difficult to see where are the peaks and where is the bottom of Aussie yen, right? So the peaks is somewhere here, 1, 2, 3, 4, 5. There are about 5 peaks here. Of the 5 top is at around 104 price level. Okay, 103 to 104 price level. Okay, the bottom is at around 56, right? So it's about double, right? 56 to 108, thereabout. Okay. So how do we know whether to buy or to sell? Okay, let me make this as easy as I can for some of you guys. Okay, when I say that I want to buy, okay, so when I say I'm buying, that means I am entering my position here, okay, anywhere here from, let's say, a 56 level, $56 price level. I'm buying here, okay, and I'm selling my position, say, somewhere here. So this one buy and one sell, okay, this contractual position will be then square off, and the difference is my profit. So I'm buying low at 56 and selling high at 103, right? So it's this is quite straightforward, huh? Okay, that's for buying or longing a contract. Now in this case, right, the trend line right now will determine for me to buy or to sell. Okay, that is why I love trading, this concept, and I think it's beautiful in the sense that as compared to traditional business, right? So as I said in my previous video, right? I said in my previous video, I've said in my previous video, you can only be a seller at most of the time, right? Say you're just selling a fashion product, you're selling a handbag, you're selling a grocery product, you're looking for the end consumer, or you're looking for a partner. Or in all times, you're trying to sell something, right? So you're always looking for a buyer in that sense to buy your products. Okay. Now in trading, I can have this dual role of being a buyer and a seller. So as I've explained earlier, right? At 56, I am a buyer. Here, I look for a seller, right? So this seller is willing to sell it to me at 103, and that's it. Okay, that's it. That ends my transaction. Now the trend line basically tells me that it has the price action has come down after hitting the peak of 102, double down, and it has broken down from this trend line here, as you can see. Okay, as you can see, it has broken down from this trend line here. Okay, now this red circle here, why am I highlighting to you guys, is this is what I term it as a it could be a challenging setup for some people, but it may be a promising setup for some people, because this is where the volatility is at one of the greatest. You can see the price breakdown, right? Look at this candle here, the price breakdown, but the buyer push it right back up. That's why you have a very long wick here, or long tail here, right? So you can see buyers are very aggressive, pushing the price back up, right? Eventually, with a green candle, and this is what we call a bullish engulfing candle, right? It engulfed over this red candle, and the price pushed back up to the trend line, and then, right, this happened only in December all the way to end Jan, and then in early Feb it come down again. So it's very, very tricky in a sense that if you are selling, right? If you're selling, where are you going to put your stop loss? Say you sell it here, okay? If you were to put your stop loss, say here, as an example, you are likely to be taken out here. Or even if you were to make it even higher, you are still taken out here. Okay, right? So this is a part where I will generally try to avoid in that sense. Okay, I will try to avoid in that sense. All right. Okay. So now that we know that the Aussie yen has broken down from the weekly trend line, but we are not going to trade on a weekly basis because that will be a very long time horizon. That means you're going to hold the position for weeks and months in order to make profit out of it, right? So we usually use the day or the 4 hour in a sense. So I will then zoom in down to the day chart. Okay. Okay, there you go, the day chart. Now the day chart, same. I will just condense my chart, right? Good enough that it can fit nicely into my computer screen. I don't have to go all the way. You see, if I were to go all the way, it becomes it is meaningless already because it get go further back into 2014 and 2015, like I say, unless you are going to be holding the position for months and years, then that makes sense. Otherwise, you need not go all the way back. Like this would be good enough, okay? And then again, I use the arrow here, touching the week of this green candle on the 26th August. I just have to move all the way up here. Very simple, see, touching the second week, and that's it. So the daily chart confirms what the weekly chart is showing, which is a breakdown of the bullish trend line, right? So this is the green color stands for the bullish trend line. Okay, bullish trend line, and you can see, let's make it bigger so that you can see easier, right? Price breakdown, pull back, and it come down again. I would use this arrow here, I think it would be perfect to explain to you. You can see that the market, as I said in my previous video, market always give us traders opportunities to get in. So there is no need to rush in the sense that, oh, I've missed this particular entry on the 27th Jan. Oh, how bad it is. See, so it flushes down all the way to about 72, and then it correct, or what we term as pull back very strongly back up here. Okay, so this pink line here act as the resistance, right? So the resistance is like a ceiling, right? Can you imagine in your home, your ceiling? Is it likely that you break out of that ceiling? No, right? So it is the same here, right? The price failed to break up of this ceiling, and it follows by this small little red candle, and then the next day it come back down again, right? It come back down again. So you see, you can have one opportunity to sell here. If you miss, you can have a second opportunity here. What happened? You are busy in a meeting, you have things to do, this and that, right? Okay, Mr. Market said, all right, traders, I give you a third chance. And there you go. On the 13th of February, see the duration, 27 Jan to 13th of February. That is a good about 2 weeks time grace for you to get into the trade. And that is just talking about just the Aussie yen, right? And I mentioned in my previous video, right, for forex, there you have more than 200 over pairs. More than 200 over pairs to trade, and that is just one main product itself, which is forex. And we are not even moving on to talk about commodities, futures, stock and shares of different countries, and ETFs, and so on and so forth. So that's just way too many products for you to play around. All right, so let's just stick with Aussie yen for the time being. So you have 3 chances, right, for you to get into this selling position: 1, 2, and 3, right? Very nicely at around 74.181. Okay, 74.181, right? So that's where I'm trying to say. Next, okay, so the daily confirms with the weekly. You already know that already. So let's move down to a smaller time frame on the 4-hour chart basis, right? Same thing, 4-hour. This is what I do. Taking the 3rd Feb candle, I just extend all the way up here. Okay, beautifully. Nice. Okay, nice. Okay, for those of course who are not using trend line and just pure price action, as some of my friends do, then they perhaps will be shorting it from here. That means they will be looking at support and resistance rather, right? Using support and resistance as a tool to guide them, right? To determine whether to buy or to sell. So they'll be selling here, they'll be selling here, they may be selling here, right? So there's one way, like I said, there are many ways to skin a cat, right? So for me, I prefer to use the trend line, so there's no right or wrong in that sense, right? So now that the price has moved down already, you can see down nicely, okay, and it might, right? It might reverse something like that, okay. Okay, so the price may move back up a little bit to here. We do not know, okay, before it comes tumbling down again to say here, okay, something like that, right? So this is the pullback, right? The pullback, right, to about 73.6. How do we know that it will come back to here? Well, it's not too difficult. If you were to use the horizontal ray, you plot a line somewhere here, you can see, right? The price come down to here. This is, I think it's support now. This is the resistance. Okay, price come down here, bounce up. Okay, hit the resistance, bounce down, up, down again, up again. Right? Eventually, it cannot hold anymore. It break down from this, break down from the bullish trend line. Okay, now it has broken down from this support. If you wish to use it, okay, so we're going to use the word help. Wow, this is too big, smaller. Okay, good. So there you go, we have the support. Then here we have the resistance, right? So you got support and you got resistance. So it's very easy. So that means if the price will pull back to 73.597, it will give you the next opportunity to sell if you're already not in position. That means those viewers who are now looking at this video currently and you wish to execute a selling position, then you've got to be patient. Do not try to chase down the price. Why do I say that? Because we do not know, right? We do not know whether if the price is going to do something like this. It can go back up here before it comes down. Okay, there's of course one scenario, or it could go up and go back inside the bullish trend line, come back close to the resistance before it reverses. Okay, before it reverses. Now, if you were to change the price now, that means you say, oh, great, it has broken down from the bullish trend line. I'm going to immediately execute my short position. Then what you are in for is your stop loss. Is if you were to start selling here, as an example, okay, say you start to short here at 73.4, okay, your stop loss is going to be pretty high, which is above the resistance here, right? Because you do not know, or at least your stop loss has to be here, above this red candle here, okay? So if you put your stop loss here, okay, at 73.8 here, if the price were to move back up, you'll be taken out already, right? You'll be taken out already. So like I said, be patient, do not chase the price. Let these price action here, which is followed by the green arrow, tells you if it's going to turn, right? If it is going to turn, or if it's going to continue to go up. How would you know that it's going to turn and if it's going to go up? Well, not too difficult. Let's use this as an example. Look at this resistance here. How do we know that it's going to turn? Look, price breakdown, right? But it's a very small green candle that show you that buyers and sellers are still indecisive, and one side is pushing down, one side is pushing back up, right? That's why you have a long wick and both end with a very short body. But this red candle here on the 27th Jan is a good confirmation. Sellers are strong, sellers are pushing the price very strongly down. Okay, price are very strongly back down. So with this candle down and these two candles, right, closing at the same level below. Look at this third red candle. It closed below, right? It closed below the first red candle here. So that is already a confirmation, right? Lower low, lower low, right? It moved back down, okay? Pull back a little bit and it come all the way down. Okay, the same thing here, right? Very strong, thrust up, and trying to break the resistance, but fail. That managed to only catch a little bit of airspace here before it come down. Very simple. You have this these few candles here. Put another what I call a support line here to help you. Once the price break down from the support, as you can see, it pull back a little bit. This is where you can already start to sell at here, 73.8, right? So 73.8, you make some, small little profits here. Okay, take this pink color line out. Okay, so sorry. And then the third time, okay, the third time it went up again. You can see the long candle wick, right? Look at the candle size itself, right? Longer, shorter body, shorter body, shorter body. Eventually followed by a bearish engulfing candle. See the long body here, right? So that tells you that the sellers is again back in action, pushing it down, pump, right? Reach this support, right? Look at this support here, right? Reach the support, bounce up, reach the support, bounce up, but without much strength, okay? Without much strength, and it come tumbling down here. Okay, it come tumbling down here. So would this go up? We don't know. So you have to let the time progress, right? Be patient while you are waiting for this pair. Perhaps you can put an alert to remind yourself, well, if the price come back to 73.6, then you might want to take a sell, something like that. Okay, so you can then know if this is a trade that you want to take or not, right? Because the price can very well surprise you and hit all the way up before it come down. Okay, so that is basically how I use the bullish trend line, the bearish trend line, the support and the resistance, right? Just pretty straightforward, as you can see. Horizontal, right? Basically the resistance and the support, and then the diagonal are basically the bullish or the bearish in that sense. Okay, so next I'm going to show you how to use the trend line to to buy or to sell a contract in that sense, and where you buy and how you take your position out. Exit your position out in that sense, right? So same thing on the 1 hour. Okay, you can see I can use here. Okay, very nice. Okay, price has already broken down from here. Okay, so if this is the level that I have entered my short position. Now, again, in trend line analysis, at least for me, I speak for myself rather than for all the other traders out there who is using trend line, because each may have their own different versions, right? So it's not so crucial whether I short here or I short here. Of course, the higher the better in that sense, right? Because you enjoy a higher profit margin, but sometimes you may not be so precise. So say I short somewhere here, right? Because there is a price breakdown and then it pulls back and then I managed only to get in here. Okay, so be it I get in here. Where would I sell at 73.721. Where would I put my stop loss? The answer is very simple here. Okay, so I'm going to put down here stop loss. That is where I put my stop loss. Here. Okay. Short. Here. Clear? So I got my short at 73.7. My stop loss is at 73.790. Which means if the price, okay, instead of moving down as we are looking at it now, the price after breaking down from somewhere here and then at this week here, it give me a U-turn back all the way up. That's not even back to the inside the trend line, but just reaching my stop loss level, I am already out. So that's the beauty of stop loss and the importance of stop loss, because we do not know where the market is going to move, right? This is something that is in the future, right? So we are basing on the law of probability. There's a high probability that it might go this way, it might go the other way, so to speak. But if in the event that the market move against us, our protection is the stop loss. So here I minimize my loss by putting this stop loss here. Okay. So if the market move up, I am protected in that sense. So this difference here, right, from 73.72 to 71, okay, this difference is my risk, my financial risk that I got to bear to take on a short position on Aussie yen, right? Fairly straightforward. Next, which is a more crucial reason, a more crucial point that traders want to know is, if I'm using trend line, where would my profit target be? Okay, where would my profit target be? Now, the answer lies in the trend line, as again, right? Okay, if I were to plot it here in that sense, and I were to ask you this question, if I buy here, okay, where would my profit target be? The answer is not here. Okay, that's not the answer. It is also not, oops. Okay, let's just. Okay, so my profit target will not be at where these two red arrows is showing me, right? Please bear in mind, we are now looking at the chart on hindsight. That means this price action had already happened, right? So let's use it this way then. Okay, we are here now. Wow, fantastic. Let's go back in time. We are in 1st Feb year 2020, right? Okay, about 10 over days ago, 1st Feb. Wow, you bought at 72.4. Hooray! And it shoot up to 73.8183. Okay, are you going to exit your position? Yes or no? For me, I speak for myself. Using my trend, my answer will be no, because I do not know how high it can go, right? So I am using the trend line to guide me, to tell me where would the price starts to turn. Okay, so in this case, right, it went up higher at 74.4. Okay, 74.4. Okay, it come back down. It come back now at 73.09. Okay, but because it did not break this trend line, the bullish trend line, so to speak, okay, I will not exit my position, because you see, if I exit my position here, what does that tell you? Oh, panic. Oh, right? So that's what a lot of traders will be doing. Okay. Wow, I'm supposed I would have an opportunity to take my profit at 74. Bad luck, this, that. I did not take it. Now that the price is coming back down to 73, it looks like it might break down from this bullish trend line. Fear and lack of experience whatsoever, panic, and they start to exit their position. So their profit is actually only here, right? Only here, because they have lost here in that sense. Okay, let's do a quick calculation, right? Okay, instead of making 191 pip profit, right? Now they are only making how much? Now they are only making oops, let's try again. Right, 62, right? So they will say, oh, it's better than none. I better get out of this position first. Okay, no, that's not what I do, at least. Okay, so I will wait and patient pace again, because I did not exit at this level. Okay, the price went back up. Okay, here. So same thing for traders who are unfamiliar with trend line. They will say, thank God. Okay, God is on my side. The price reversed again. Now I'm going to get out. Okay, good luck for you. If you get out, you, in this case, right, because it's based on hindsight, you spotted correctly. Okay, you make that 100 over 90 over profits, as we said, right? Pips profit, as we said. Good luck. I mean, congratulations to you. But again, I will not, because I do not know if the price action has reversed its course, right? I will only exit when it turn from the bullish trend line to the bearish trend line, meaning, as in this case here, right? Price move, 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 move. When it comes to here, there is a possibility, right? There is a possibility that it might touch this bullish trend line and then it reverse back up here. Okay, it might reverse and go back up here, just like this, right? Here, right? It did not touch this trend line, but almost, right? This support line here, and then it reversed back up. So I was also thinking, hey, maybe this will go up, but in actual fact, it did not move up, but tumble down. So this would be where I would exit my position. Okay, not here, okay, but here, somewhere here. The moment it break down from this, okay, anywhere here, okay, will be where I take my profit already. Okay, yes. Now of course we are looking again, like I said, on a historical pattern. You will say, wow, that means I have tentatively sacrificed the potential profit loss of this much here. And the answer is yes. This is what you potentially lost. But the challenge is we do not know the future direction of the market. If we know, of course, if I know that the price touch here and it will definitely come down and it will reach here and it will come down here and from here it will break down, of course, at the very first instance, I would have taken my profit here, get out of the position and move on to other profitable trades. Because I do not know, and I suppose nobody knows the direction of the market, right? Okay, I continue to hold until the price action proves me otherwise. So in this case, it proves me wrong. Okay, it didn't rebound from here. It break down from the bullish trend line. Okay, that is where 73.72. Okay, so my profit will be, say, about 125 pips profit. Okay, to me that is good enough. Okay, to me that's good enough, and that is where I exit my position. Okay, this is for a long contract. Okay, that means I'm buying up in that sense, right? Very, very straightforward, very, very simple. If you want to use the trend line to guide you, right? Not a predetermined way of putting your profit target as some other traders might do. You know, they're using the risk reward ratio of 1:3, 1:4, 1:5. Now that, to me, again, no right and wrong, right? So I'm not saying who's right, who's wrong. At least you know, it's whether you're comfortable with it. If you go on a 1:2 or 1:3, for example, so maybe I will give this example here. So you buy at this level here, right? And your stop loss is somewhere here, for example. Okay. So if you were to do it on a 1:3 basis here, that means this we take as 1 square, right? It's very easy, roughly about 1 square here. So you take 1 square, 1, 2, 3, somewhere here, which means our likely exit somewhere here already. See, right? This is where you are risking one part, right? And you are gaining 3, right? So that is how some traders would term it. That means they will already prefix in their trading system, right? I mean, whatever system that they are using, right, with the broker, right? They will already key in their profit here at 73.252. If the price come here, I'm out. Of course, it's again on high side, right? We know that the price went much further up. In fact, almost double, right? So you can say, right, this can be another 3 here or 4 here, right? So if I had used that method of 1:3 or 1:4, which again can be very hard to determine. Of course, who will want to have 1:3 when you can have 1:20? How would you know if it's 20 or if it's 2? That is the you know, the difficult part of it to really determine how the market direction is going to be. You know, whether the central government is going to cut interest rate, or you know, are they going to pump more liquidity into the market, and as such cause the price to move up by another 10-20% or whatever. You know, there's so many factors involved, and I think where forex is concerned, there are even more factors coming in. So I choose not to be too bogged down by all this nitty-gritty, because I love to read and try to, you know, make some connection, but I find it too mind-boggling for me. So I rather stick with the trend line. So it's like I say, very straightforward, very simple. I buy here, okay. I use the trend line to guide me. One time it didn't break, second time it didn't break, third time it break. Okay, bye bye. I'm out here already. Okay, I'm out here. So it's very simple, nothing complicated. Now, let's take a look at the sell position that I'm talking about, okay? Very nicely, as we are talking about now, you can see that the price is moving up, right? Okay, so I short here, my stop loss is here. How do I, again, determine my profit target? Okay, same thing, make it bigger, okay? On a 1 hour chart, if you are trading, that is, use the arrow, okay? Okay, this will be the highest point, but if you were to draw this highest point here, you know, there's no way that you can connect to the next lower point. Then your trend line is going to look like this. Now then it's going to be very weird, right? That means the price can move all the way up here. So that this is not what you want. Okay, very simple. You move this to somewhere here, maybe here, this point down here, and you move this down to here. See, something like that. Okay, so it's, yeah, where the more verticals. Let me just get this straight first. Yeah, that's why they say man is very hard to do multitasking. They can't be drawing and talking at the same time, unlike my wife, who can of course do that. Okay, so let me see. Let me draw this down here. Oh, this is difficult. Okay. Yep. Nice. Yep. Okay. Something like that. That will do. That will do. Okay. Okay. See, short at 73.71, stop loss at 73.79, right? Pump, 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 pump. Price has moved down. Price has, listen carefully, price has broken out from the bearish trend line. Okay, bearish trend line will be determined by rate. So as you have seen, a lot of my charts on tradingview.com, right? I basically try to use the same color code. So it over time, it just drilled in my mind. Okay, red down, green up, very simple. Okay? So there's no complication in the sense. See, price has already broken out. Yeah, would it move back down? Yes, there's a possibility. Of course, we can always say, oh, price may reverse down and then I can take more profit. Yeah, there's a possibility. But price can also go this way. Now the candle is coming up, right? Can it move back up this way? How high can it go? Can it go up here? Can it go up here? Before it reverse down again? Your guess is as good as mine. I do not know and I don't really care, right? I mean, if you want to use the trend line, you are basically, like I've said, you are a market follower, right? You are a market follower. You are not trying to forecast where the market is going to move. And I think that is dangerous. And we have seen a lot of market gurus out there for the longest of time. They have been predicting that, that the stock market, the S&P and the Dow Jones is going to go into a bear market. That was the last I heard was maybe about 5 to 8 years ago. That's when they say, and they are still calling, the bear market is going to come. But look at where S&P and where Dow Jones is today. They are making record highs day after day, week after week, month after month. Right? And nobody knows how high it's going to go. We can talk about the recession coming. We can talk about so many factors. The coronavirus is going to have a serious global impact on the market, and as such, this is going to be affected. That's going to be affected. So many people want to play the game of forecasting, and I often remind myself the objective of trading and investment is to make a profit, right? And unless I want to be to be seen on the news and become famous and whatsoever, right? Then maybe I might want to, get into that the other side of the field. But that's not my intention. So if I want to make profit, then I jolly well stick to these simple rules, right? To break down from this. Right now you can see now you can see as we are talking, look at what is happening to the candle, right? The body, which is the green part, now is getting thinner, meaning the sellers are coming in as well, right? Fighting with the bulls, right? Bulls are fighting. So the longer the body of longer the green body means the more the buyers are pushing up. The longer the red body means the sellers are coming, pushing it down very aggressively, right? So in this case, in this case, let me get this out. Okay. In this case, very simple. See, don't need to rush, don't need to do anything, don't need to say, oh, you want to max out on your profit. It's a, should I say, rough field will do. Just calculate for yourself, right? From here to here. Again, I will take here as one cell, right? Two, this is 1, 2, 3. Okay, again, I'm going to be very conservative. Easily just from visual, I can tell is already I'm risking $1 to make $3 profit. Isn't that good? Right? So the whole idea of trading is not about getting your trades on a winning basis all the time, right? So there might be some confusion among some of the new traders thinking that you need to get winning trades all the time or 100% of the time in order to make profit. No, I think that is a myth. The real answer lies in consistency. Consistency in what? In getting your winning trades with high risk reward ratio, as in this case, there is 1:3. Right? Imagine there are some trades down the road that you're able to plot and predict, also called a chart, and it gives you a 1:5 or 1:8 or 20 risk reward ratio. So over 10 trades, if you can have 4 to 5 trades or even 3 to 4 trades of such basis of 1:3 or 1:4, 1:5, right? Versus the remaining losing trade that you have, okay? Over a period of time, you are going to generate profits, okay? And you're going to generate very good returns at the end of the month or at the end of the year, okay? Because you see, my stop loss is tight in that sense, right? I'm not greedy. I am realistic in the sense, the moment the price action move against me back up to the bullish trend line, never mind, okay, the keyword here is never mind if the market tries to trick me, which I've been tricked many a times and still being tricked because I cannot feel the pulse of the market in that sense of where it's going to go. So it may trick me by giving me a false, let me draw this, right? It may trick me by giving me a false breakup, right? So it went up in that sense, it went up. Oops, this is not good, so it might confuse you guys. Let me just draw this again. Okay. So it moved up and then it moved down, just like that. It's a big one. And then it moved up again a little bit. Okay, so it might trick me, right? A few times like that, ding dong here, right? A few times before we get the final confirmation, as we have seen earlier, right? As we have seen earlier, how the market tricked you, right? We have seen that before, right? On the forward chart, it will be easier. Okay, right? So the market can trick you in that sense of where you want to go. Okay. See, that is what I meant, right? Here, okay, market trick you. Oh, breakdown, 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 breakdown. So you short, but the market came reverse strongly back up here, right? So there's one. Then here we have a second one here. Look at this part, as I was saying. Look at these candles here. And this is on a 4-hour chart, right? So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That is 40 hours. That's close to about 1.5 days to 2 days. 2 days. 2 days the market try to trick you. Hey, am I going up? Am I coming down? Am I going up? Am I coming down? So you do not know. So what do? Okay, as I said, once the candles start to form is kind of a pattern, all you need to do is use the line here to help you. It's so simple, right? Long red candle, flush down, yes. That's the entry point you want, not this immediate red candle, because if you take this red candle, then you will be likely selling here instead of selling it here, right? Instead of selling it here. So you want to sell high and buy low. Sell high and buy low in that sense. So that is where you get in. Ignore this part, right? So back to here. Sorry, let's go back to the 1 hour. Oops, before I do that, let me get rid of all these lines. I start to confuse. Okay, we go back to the 1 hour. Aha, okay, as we are talking, it's interesting with the chart is developing, right? See, if I do not take my profit, I was just putting a random profit target here, right? At 73.42. Look at where the candle is moving now. It's moving to 73.445 as we are talking. See, which means your profit target, your profit is diminished as we are talking now. Instead of from here, it becomes here now. If you do not exit, because you do not have a strategy, you do not know where to exit your position. So this red line, you see, is so beautiful. It guides you where to take your profit, and you don't have to have precise, like I said. Anywhere here will do. Even right now at 73.44, you are still earning a 1:3 risk reward ratio. That's good enough, right? Over a 10 trades period, as I've said, if you can have 3 to 4 of such trades, and mind you, you won't be always getting 1:3. If luck is on your side or good trade setup is coming up, you may get 1:5, 1:7, 1:20 even, right? So by and large, it will cover up all the losses that you have, because you look at your losses. If each and every loss that you are going to put for your trade, look how small, how tight it is, right? You are able to make it so tight, not because you want to, but because the chart tells you so, right? Breakdown. Why would I need to put a higher stop loss, right? For example, there's no need for me to put my stop loss here, because the moment the price move back up here, right? I have no idea. I can't foretell whether the price will move even higher up. So by putting my stop loss here, I am wasting my capital. I'm wasting, my ammunition, so to speak. So I do not have to put my stop loss so high. All I need to do is, because 73.72 here is where I'm going to sell. I just need to put it just above this red candle will do, right? Anywhere here, you see, I can be even smaller here, or you can be here. I mean, it's up to you. It's not rocket science. I mean, yeah, it's not really rocket science, so to speak. So don't get too crazy or trying to use calculators and whatever you have, and people telling you to calculate this and that. I at least not for me. I have never done all these things using calculators, and it's all what my eyes can tell me. That's what they say. Trade what you see. Yeah. So this is what I see right now, and that's it. So trading, as far as I'm concerned, should be simple, should be easy to execute without that kind of stress that you need to get into. All right. So I hope this trend line drawing has been helpful to you guys, and it provides you some clarity about how to use the trend line in buying and in selling of your position, where to put your stop loss, and how to take profits, and where to indicate to take your profits. You do not be overly concerned that you are not taking the maximum profit. Okay, I think that is the key word here. Yeah, many traders would love to be buying at the market rock bottom and selling at the market peak. Of course, that is the ideal situation, right? Now, trading is not about being ideal. Trading is a very pragmatic game. It's so pragmatic that you are either in profit or you are lost. There's no gray area here. A gray area means you are not trading. You're just sitting on the fence and keep watching and watching. Of course, that's not what you and I want, right? So yeah, that's the purpose of this video. I hope it's useful to you guys. Until the next time, right? This is Desmond from Singapore signing off. Take care and goodbye.